Tell us a little bit more about the rationale behind the creation of Nautilus.
It's a counter-cyclical instrument, the SPAC vehicle, and it enables investors to enter in the right side of the cycle, at the bottom of the cycle, as is the case right now. The sectors that we're currently targeting are mainly in the offshore, primarily, and energy sector and services in those areas.
The mandate is pretty wide actually, because it's shipping or shipping services or anything else that the investor would like would make sense for the investor. But however, in this time and age where the traditional sectors like dry and the wet have almost negative arbitrage in these days, you have to go into some more peripheral energy-related stuff like Akis mentioned, the offshore sector. Well, the benefits, the company first of all, you can buy either assets or a company. So the asset transaction, it's much more like the transaction we did in our previous transaction in a SPAC vehicle, which created Star Bulk Carriers. But the reverse merger is also possible, and at that point, the company that reverse merges into you can actually decouple the timing at which it enters the public markets and the time that it raises the additional capital that it needs. So the fact that we just have 48 million doesn't mean that you cannot do a much bigger transaction, because actually the currency of the company is its shares. So you can have an exchange of shares plus the cash that we have.
A couple of additional advantages going through the SPAC vehicle to list, meaning that you don't go through the pricing exercise that's normally done in a normal IPO. This is a negotiated transaction, and this relieves the pressure of the pricing exercise. And another very advantageous thing is that you can have an earn-out in a transaction with the SPAC, which is a concept that cannot really apply to a normal IPO.
The markets that you may be targeting, do you think there is a trough? What are you thinking on timelines?
We're targeting areas that have better fundamentals, better margins. As far as timing is concerned, we have until mid-February 2013 to complete the transaction. Of course, we're not going to be waiting for the last minute, obviously.
You talked about the need for industry consolidation. Do you still have that view?
I strongly believe that the parameters for consolidation are there. They do exist. We have not seen it for various reasons, but at least I believe the environment is ripe for it.
So do you think we'll see more consolidation in the coming years?
Well, I don't want to predict that, because we haven't seen it, and this environment has been with us for some time, as you know from our previous interview. So I don't know if there is going to be some kind of an event that will overturn that environment, but we haven't seen it. So how can I foresee the future? But the parameters are there.
And we hope it happens, because it would give investors, I think, another moment, another threshold to get more interest and focus into the sectors. Because investors right now have been losing faith of mergers and other transactions, and that's, we think it's bad for the sector, because it cannot refocus investor interest into those sectors.